Hi, Graham from Playfair Finance here. I just wanted to talk to you today about property investing, buy-to-let mortgages, and whether a capital and repayment mortgage is actually better than an interest-only mortgage. It's normally held that people investing in property would use an interest-only mortgage, and the reason for that is that it reduces your monthly outgoings, so increases your cash flow, with a view to being able to repay that loan when the loan falls due. Obviously, capital and repayment is very much like your principal private residence or residential home, where you're paying an element of that loan off every month alongside the interest. Now that obviously reduces your cash flow. However, the reason I asked this question is, firstly, for buy-to-let investors, it's quite odd if you're new to buy-to-let investing to think that interest only is the main route, given the bad press that interest only obviously got for your principal private residence in terms of investment vehicles to repay the loan. But a lot of the property courses that you can look at and information available talks really about property being a way of replacing your income and giving you passive income so that you can escape the rat race and live a life of freedom and choice. But if that's the case, obviously the amount of money that you're taking out, increased by having an interest-only mortgage, is used as income. It's never going to be available for you to repay that mortgage. So if your long-term plan is to have that property as a pension, for argument's sake, and that income is going to repay and replace your pension, it's not going to happen, because you're going to have to sell that property at some point when you get to the point where you can no longer keep refinancing it in order to be able to clear the loan, which will obviously obliterate your income. This may be controversial. I know a lot of people in the broker industry certainly use interest-only mortgages, and they are the predominant product available. But it's just a thought. Like anything in property investment, given the recent changes, particularly with interest relief being taken away or phased out, there's a lot of choices to be made, compromises dependent on your own individual circumstances and plans. So it's just something to bear in mind. Hope that's helpful.